Will Microsoft and Apple earnings bring NASDAQ to new highs? Well, I don't know necessarily where these earnings will lead Microsoft and Apple even, let alone which direction it'll pull NASDAQ. We can theoretically produce some potential outcomes given bearish or bullish results from these two huge big name stocks here. Not only huge by market capitalization standards, but of course that market capitalization in, I believe, the trillions for both of these stocks, multi-trillions, I believe. Man, I need to check that. These numbers get so crazy, folks, the last couple of years that I don't even necessarily know what number of trillions we are market cap for Apple and Microsoft. But I do know that these two stocks make up about 15% of the S&P 500, 500 stocks in the S&P 500, two of those 500, which if it was evenly distributed would account for much less than 1% of the index. But two of them, between the two, almost 15%. You go to the NASDAQ 100, as we'll see in a second, and that's 25% of that index. As you can see here, the two top stocks and Microsoft reporting earnings today as we speak. Actually, they're digesting that earnings move, and you're probably seeing NASDAQ futures move along with it. Apple reports next week, and it's going to have a big effect on these indices. It's going to be pretty direct, right? Like I'm not telling you anything that is necessarily nuanced or is an opinion, given that Microsoft's almost 7% of the S&P. It's, I think, almost 13% of the NASDAQ. Apple's almost 8% of the S&P, about 13% of the NASDAQ. And so an earnings move one way or the other, of course, is going to have a direct effect on these indices. And thus, any investment you have in an ETF that tracks the NASDAQ or the S&P 500, or even if you've got, other ETFs that aren't necessarily the spider ETFs, which are very popular. I've got some Vanguard. Look at the holdings on those. They're likely going to have a large chunk in these two stocks, as you see 25% of the NASDAQ in these two stocks. And you look at the movement of the NASDAQ, which a lot of people quote as our general stock market, compared to these two individual stocks. And I'll be damned if they don't look very, very similar. And this is to go even further. Like I say, of course, if, and we'll do some math here in a second, if these two stocks are 25% of the NASDAQ and they both move higher by 10%, that's going to be worth about 2.5% up in the NASDAQ. Okay, that's pretty simple math. Maybe you didn't know that. You didn't know the weightings and everything else and how the math plays out. That's direct. It's simple math. But on top of that, what goes unnoticed or maybe not talked about, because there's a little bit of nuance in it, and it doesn't have to be 100% so. It's not guaranteed, obviously, but it is almost inferred and happens a lot, is the high correlation. When Microsoft and Apple are doing well, usually NVIDIA and let me just backtrack for 1 second. Google and Amazon and these other stocks, Meta, are usually also doing well. There's a high correlation. These are all tech stocks. And so if Apple and Microsoft come out, they both scream higher by 10% off of earnings, or they both move lower by 10% off of earnings, not only is that going to have the direct effect, but they're also very highly correlated with each other and with those other tech stocks that make up a large portion of the S&P and the NASDAQ. And let's get into a little bit of what the direct effect would be before we find what it might take to take the NASDAQ to new all-time highs. As you can see, very directly, some large swings on the S&P 500. And I always comment when we look at math like this, like it may not look like a lot, where, Microsoft or Apple moving 10%, which is, can be a common earnings move. These stocks are a little bit larger now, a little bit more diversified than, say, 5-10 years ago. But I remember some huge earnings moves off of these two, and especially Amazon and Google a few years ago, definitely capable of 10% plus moves. And you might say, well, Apple up 10% is only 0.8% of the S&P 500. I mean, a 1% up day or down day in the S&P 500 is significant in the grand scheme of things. And one stock committing that type of price action, especially when you bring in that correlation aspect where this is all theoretical, but let's say Apple moves higher by 10% or lower by 10%. Of course, these, relatively equal outcomes here. And there's a strong, 0.6, 0.7, 0.8 correlation to, just quickly going back to our weightings, Google, Amazon, NVIDIA, these other stocks that take up another, 10% chunk of the S&P 500. And so 10% higher by Apple, worth about 0.8% in the S&P 500. And maybe that pulls along the rest of this top 10 for 2, 3, 4% higher. You're going to really see a significant move out of there. And again, this is a diversified 500 stock index, and then NASDAQ, relatively less diversified, but 100 stock index. And one earnings report, which happens 4 times a year, to one stock could be worth, 1-2% in this large index, really making waves potentially here on an annual basis. I always come back to this. Historically, the S&P 500 performing on an average positive 6 or 7%, depending on how far back you're looking historically. And so 1 percentage point, anything close to that or beyond that in one day, because of one stock's one earnings that they commit 4 times annually, that's a pretty significant influence. And then you commit these same potential outcomes to the NASDAQ, and obviously it's even greater given that Microsoft and Apple are both around 13%. Yeah, I have that right. Around 13% of the NASDAQ. And you also start to take into effect if you have any XLK, which is a technology sector, or you have the single stocks themselves, which are so large at this point, kind of can be considered sometimes, diversified markets in their own right. Apple and Microsoft obviously have so many divisions and things that they do. But if you have, the single stocks, these earnings really make waves in your potential portfolio there in the stock market at large. And also, I didn't even, think about the fact that Berkshire Hathaway, another large weighting in the S&P 500, has a considerable Apple investment. So again, these two stocks really, really influential. And that's what makes these earnings moves so important for Microsoft this week and Apple next week. And then, of course, all the earnings on into the future. And even more relevant, given that we're within 6% of all-time highs in the NASDAQ, a lot of people wondering if all-time highs will be the next stop for NASDAQ or back closer to the inflation-driven, interest rate-driven lows near 10K. And this earnings cycle will have a lot to say about this because, and again, I don't think this is necessarily, of course, the market, the options market and everything else will tell you that a 23% move is quite rare off of earnings for Microsoft or Apple. But it is interesting to see, okay, the prior high in NASDAQ is 16.6, let's call it. We're about 6% as of earlier today away from that all-time high. And to get there directly because of Microsoft and Apple, you need a 23% move, all else equal, from those two markets. But of course, if you saw a 15% move higher in both those markets, you would expect that the rest of that technology sector is also gaining steam to the upside as well. And that might be enough to get you and the NASDAQ to new all-time highs. Of course, it has to be stated that on the flip side, equally as likely, a 10% move lower. I mean, we just saw the huge move lower off Tesla earnings, huge move lower off Netflix earnings. If you pile on an earnings move lower off Microsoft and Apple, could really send this NASDAQ lower here, given how influential these earnings can be. So, every earnings cycle is so interesting for the single stocks and actively trading around it and taking a diagnostic check of how the different sectors are doing. But this one in particular, very, very relevant to see whether or not NASDAQ will ascend past new all-time highs or get sent back to the middle of the range.